Nobody becomes rich in the market by being right all the time. They become rich by surviving longer than everyone else. The traders you're about to see didn't predict the future. They didn't win every trade. Some of them were wrong, publicly, painfully, and expensively. But they understood something most people never will. They understood risk. They understood human behavior. And most importantly, they understood the price of staying in the game. This is not a motivational video. This is not financial advice. This is the real story behind the 10 richest traders in history and the lessons that quietly shaped how money really works. Most people believe successful traders are geniuses, that they see patterns others can't, that they always know where the market is going next. That belief is comforting, because if success requires genius, failure feels excusable. But when you study the greatest traders of all time, a different truth appears. They didn't win because they were smarter. They won because they lost differently. Smaller losses, less emotional damage, faster recovery. Let's begin. Number 10. Richard Dennis. Richard Dennis started as a runner on the trading floor. No pedigree, no elite education, just curiosity and discipline. He turned $1,600 into over $200 million. But his most famous experiment wasn't about money. He believed trading could be taught. So he took a group of ordinary people, no background, no experience, and trained them using a simple trend-following system. They became known as the turtle traders. Many of them became wildly profitable. The lesson? Trading success is not about talent. It's about following rules when emotions scream at you to break them. Most people don't fail because the system is bad. They fail because they abandon it the moment discomfort appears. Number 9. Paul Tudor Jones. In 1987, the stock market collapsed in a single day, Black Monday. While most people panicked, Paul Tudor Jones made hundreds of millions, not because he predicted the crash, but because he was prepared for it. His core belief is simple. The most important rule of trading is great defense. He obsessively controls risk. He cuts losses fast. He never lets ego override protection. The lesson? Your goal is not to make money. Your goal is to avoid ruin. Because if you survive long enough, opportunity always returns. Number 8. Stanley Druckenmiller. Stanley Druckenmiller is quietly one of the greatest traders who ever lived. For decades, he delivered extraordinary returns with almost no major drawdowns. His secret? Patience. He doesn't trade often. He waits for moments where risk is asymmetric, where a small loss can lead to a massive gain. The best traders don't trade often. They wait. The lesson? Overtrading is not ambition. It's insecurity disguised as effort. Number 7. Jim Simmons. Jim Simmons wasn't a trader. He was a mathematician. He founded Renaissance Technologies and built one of the most profitable funds in history. The Medallion Fund reportedly averaged over 60% annual returns. No intuition, no news, no opinions, just data. Simmons understood something profound. Markets are noisy because humans are emotional. Patterns exist because people repeat mistakes. The lesson? Your emotions are not an advantage. They are the inefficiency the market feeds on. Number 6. Jesse Livermore. Jesse Livermore was the most famous trader of his era. He made fortunes, lost everything, made it back, then lost it again. He understood markets deeply, but he never mastered himself. His famous quote, "It never was my thinking that made the big money, it was my sitting." Yet, despite knowing patience, he couldn't control excess. The lesson? Skill without discipline is self-destruction. The market doesn't punish ignorance, it punishes lack of emotional control. Number 5. Ray Dalio. Ray Dalio built Bridgewater into the world's largest hedge fund, but before that, he went broke, completely. That failure reshaped his philosophy. He began documenting mistakes, studying cause and effect, building systems to remove ego from decisions. His famous equation, pain plus reflection equals progress. The lesson? Failure is not the enemy. Unexamined failure is. Number 4. Carl Icahn. Carl Icahn doesn't trade charts, he trades influence. He identifies undervalued companies and forces change through pressure and control. His edge isn't prediction, it's leverage. The lesson? Markets don't move only on numbers, they move on power, incentives, and control. Number 3. Bill Ackman. Bill Ackman has experienced both extremes. He made billions during the 2020 crash. He also suffered public, humiliating losses. His conviction is intense, sometimes too intense. The lesson? Confidence is essential, but unchecked conviction turns into blindness. Being right feels good. Staying solvent feels better. Number 2. George Soros. George Soros famously made $1 billion in a single day by betting against the British pound. But that's not what made him legendary. This did. I'm only rich because I know when I'm wrong. Soros exits fast. He reverses when the thesis breaks. He doesn't defend positions, he abandons them. The lesson? Your opinion doesn't matter. Reality does. Number 1. Warren Buffett. Warren Buffett isn't a trader in a traditional sense, but his understanding of markets is unmatched. His greatest edge? Time. He doesn't rush, he lets compounding do the heavy lifting. The stock market is a device for transferring money from the impatient to the patient. The lesson? Speed is overrated, consistency is underestimated. When you strip away the fame, the money, and the legends, 5 truths remain. None of them were right all the time. All of them respected risk. Most of them waited more than they acted. They survived mistakes. They mastered themselves before mastering the market. The market doesn't reward intelligence, it rewards behavior. And the biggest edge you'll ever have is not strategy, it's discipline. Because in the end, the goal isn't to beat the market, the goal is to stay in the game long enough for the market to work for you.